Hey all, one last walkthrough of the exam, practice exam. We'll do question 7, question 8. So question 7, private company, decide to sell a division, losses, blah, blah, blah. Plan to dispose. And we've got some information. Again, the instructions. Assuming GDD qualifies for treatment as a discontinued operation, prepare a partial income statement for Abacor for 2019. The statement should begin with income from continuing operations. So this is another income statement question, but we don't have all the normal detail. We just want, basically this is to demonstrate you know how to do discontinued operations. So we're starting with the line income from continuing operations. So we would have had a whole income statement up above here for Abacor. Abacor Limited. Yeah, I'm not going to be too fussy about a title on this because it's not a formal statement. It's just a partial income statement. Year ended, blah, blah. I assume December 31, 2019 or something like that. Okay, so after-tax income, excluding the results from GDD, was $230,000. So that's my income from continuing operations. And let's get some commas in here. During the year, after-tax loss of $140 from GDD, we got taxes or revenue and expenses, but that's our after-tax number already. And estimates that after paying all fees and costs, it will incur a loss of $145 to dispose of GDD. The income tax benefit from realizing the loss on disposal is expected to be $30. So there's a little bit of a tax calculation on that loss. And that's it. So what have we got? We've got a loss from operations of $140,000. That's not the greatest wording in the world, but... And then we've got a loss of $145 to dispose, but we will save $30,000 because of that loss, right? If you lose money, you can offset that loss against other income. So essentially you save income tax dollars. So my loss here is going to be equal to the 145. So minus 145 plus 30,000 of losses I'm going to recover. So kind of similar to the one we did in class. Loss on disposal of GDD. And let's total those two. So that's my total loss from discontinued operations. And net income. It's going to be equal to the $230 I made from continuing minus the loss I had from discontinued. Okay, and I have no information here about shares, so I can't do a earnings per share. So a pretty tiny little question. Really, it's just to demonstrate that you know you need to have those two lines net of tax for the discontinued operations. Question 8. Acquired 40% for $250. How many shares they had outstanding and a carrying amount. So we're using the equity method here. Carbon Co is using the equity method to account for this investment, so we want the entries for the equity method. For 2018, so Jan 1 we acquired for $250,000. Right, always the same entry for an investment when I acquire it. Whoops. Now it's important here, we acquired 40%. So during 2018, Capture reported a net loss of $80,000. That means 40% of that loss belongs to us, and we need to record that. It's going to take the value of our investment down, right? If the company we bought part of loses money, we lose money. So 80,000 times 40%. And that's a loss to us. And during the year they paid dividends totaling 40,000. Well, if the company we own shares in paid dividends, we got some cash. It was 40,000 paid in total, and we own 40%. And in the equity method, where this is a little different, dividends are not investment income. They're a reduction in the value of our investment because cash came out. Oops, I got one too many zeros there. Oops, sorry. And yeah, that's that. And in B is, as a result of the loss, Carbon reviewed the value of the investment for impairment and determined that the investment had a fair value of $150,000 at the end of the year. Record any required impairment entry. Well, in order to figure out if I have an impairment entry, I need to figure out what the balance in the account is. So I've got this investment account that I started with $250,000. Then I reduced it by 32, there's that credit. And then I reduced it by another 16, there's that credit. So the balance in my investment account right now is a debit of 202. Okay, so based on the entries I did, the balance in the account is 202. In class, I think we disposed of it at this point in time and we had to get rid of it. But this one we're looking at impairment. And for an investment, they're just going to give us fair value and they say it's 150. So the most this investment can be recorded at is 150. Well, how do I get it to 150? I must need to record a credit of 52, right? Sitting on my books at 202, I record a credit of 52 and that'll get it down to 150. So I have an impairment loss. Impairment loss would be a fine title. I'm just going to call it investment income. And the credit that went against my investment. Okay, so again, when you're getting ready for the exam, I would definitely just have whatever you need to remind you equity method investments are always these three journal entries. Right? I bought it. I record my share of income. Now this one is backwards because it was a share of a loss. And I record receiving my dividends. And in most questions we did, it either asked you for the balance or we disposed of the investment, in which case you'd need to know the balance, or in this case we had impairment, so you needed to know the balance. That's it for the practice exam. That's it for this question, the equity method. If there's anything I can do for you, send me a message. Good luck. Talk to you later.